Hi pension subscribers and welcome back to the channel. My name's Dominic James Murray, CEO and founder here at Cameron James. Okay, so today we're going to be discussing quite a complicated topic on PCLS recycling rules. Okay, so if you don't quite understand what this means, I'm going to unpack it for you. So your PCLS is your Pension Commencement Lump Sum, your 25% tax-free lump sum that you get from pretty much any pension scheme in the United Kingdom. It's important to caveat that with final salary schemes, you really should just call it your Pension Commencement Lump Sum and forget the 25% tax-free terminology, because a final salary scheme will never give you the full 25%. If you want the full 25%, you need to transfer out to a personal pension such as a SIP. If you wish to understand a little bit more about this, you can book in the description below via the calendar link, pick a day and time which is most suitable for you in my diary. You'll receive an automatic due diligence email. You can also click on the WhatsApp link to start a more informal conversation with me there. I might even send you a voice note back to give you a summary of your question, or you can just drop me an email directly at dominic.murray@cjfinance.co.uk. Okay, so to start off with, PCLS recycling rules. What does this mean and when does it occur? So, say for example, someone has £1 million pension. Nice problem to have. They then take their 25% PCLS lump sum. They have £250,000 into their bank account. Then they're like, what am I going to do with this money? You know what? Why don't I top up my SIP? Or why don't I top up one of my UK pension schemes and I can then get extra tax relief on that money again. Now you can understand where the recycling term is coming from. And in fairness to the UK government, you have to think about it. Earlier in life, you made contributions that came off your salary, so you had no tax applied to them. The UK government then topped up those pension contributions. That money grew free from capital gains tax for a period of 5, 10, 15, 20, whatever it is, 30, 40 years. You then withdrawn a 25% tax-free amount again. So far, all that's happened is the government has let you save tax-free, they've added onto it, they let it grow tax-free, and now they've given you 25% of it back tax-free. So that's a pretty good system from the UK government. If you're then trying to take the 25% tax-free amount, reinvest it to get more tax relief from the government, that's where obviously they start saying, no, that's not cool. That's not the way the system has been designed to work. So my advice to clients would be, you should really try to avoid PCLS recycling at all costs. Now, there are specific rules if you really want to look into this into detail. However, my advice would be that they are extremely complicated to understand. So for example, one of the definitions is if your contributions to your scheme are much higher than anticipated. The HMRC gives a guidance of around 30%, but again, it's not a hard and fast rule. There's also whether or not you had the intent to do this in the first place. Did you purposely take out the 25% PCLS with the plan of investing it into a pension scheme to get extra tax relief? Or maybe something terrible happened in your life and you ran out of money, it was the only money you had left and you had to top up your scheme or for some type of reason. It's a very messy area and one that I wouldn't really try to navigate unless you're very, very smart or know exactly what you're doing. More importantly, why take your PCLS if you're just going to put it in your bank? I don't understand this from clients at all. Some people reach the age of 55 with their SIP and say, I want to take my 25% PCLS. I'm like, okay, great, what are you doing with it? Oh, I'm not sure. Just for them, the idea that they can have tax-free money, they're like, oh, I'll take it now in case the opportunity goes away. I don't really think this is very good financial planning, because inside a UK pension wrapper, as I say to a lot of my clients, particularly those living outside of the UK, it is free from UK inheritance tax, all UK pensions when you die. So what this means is you could actually grow the money inside your UK pension pot, pass it on to your beneficiaries, and as long as things are done before age 75, there will be no inheritance tax to be paid on that eventual asset. Also, that money will grow free from capital gains tax. Yes, you could take the 25% out. You could invest it into an ISA, which also has free from capital gains tax, but you can only put 20 grand into an ISA per year at the moment in the time of writing. So it would take you a very long time to get that 250k into a tax efficient system. And then if you die with an ISA, it will form part of your estate and will form part of your inheritance tax. As such, what I would say to my clients is, unless you have a clear plan for the PCLS, leave it in the pension scheme. You don't have to take it at age 55. You could take it at 56, 57, 60, 65. Let the money grow. Let the money compound, get growth. And then when you have a project, take the PCLS amount that you need. You don't need to take the full 25%. For example, say you have the £1 million pension pot again. You need to build a conservatory, which is going to cost you £30,000. I don't know much about building, but there you go. £30,000. So with your £1 million pot, do you need to take 250,000 now to get that 30,000? No. Because then you're going to have £220,000 sitting in your bank account, which unless you've got a real good plan for that money, you may as well left invested inside your SIP solution or your private pension to continue growing that asset. So if a client came to me with £1 million SIP and said, Dominic, I need £30,000, we would actually crystallize £120,000 of their SIP. The remaining 75%, 90,000, would remain inside the SIP, continuing to grow, free from capital gains tax, free from inheritance tax, and the £30,000 or the 25% could be withdrawn as the PCLS, or have to be withdrawn as the PCLS to cover off the conservatory work. Guys, I hope that's been useful. That's a bit of a summary from me on PCLS recycling rules. I would avoid them at all costs. If you really want to go down that route, make sure you do your reading. There's actually a very good article from the FT Advisor on this, which covers it in a little bit more detail. Guys, I hope you found the video useful. As always, please like, share, and subscribe to let us know we're doing a good job. And I look forward to speaking with you on the next channel. Thank you. Bye-bye.